Welcome back. Welcome back to forpay.org. This is Consumers Dr. Vengala. Thank you for joining. Today's topic, mandate versus voluntary coverage. What the heck is you're talking about? Yes, mandate or voluntary coverage. Do you want to mandate everybody should have an insurance, or you should make it voluntary? Folks, I'm on the voluntary side. I am not sure where you stand. It doesn't matter. What I'll just give a thought to what is the difference between mandate and voluntary. There are a lot of issues, folks. We live in a democratic country. We want freedom. Yes, freedom in healthcare. I believe that is when we talk about healthcare, it doesn't matter which side of the political aisle you belong to. Basically, everyone wants to control you by having a mandate. When you give a mandate, you know what it means? Well, I'll tell you why. When you give you a card, Medicaid or voluntary covered California, you name it, they give you a voucher, give you a subsidy. With that comes rules and regulations, folks, rules and regulations. It is a good thing we are trying to address the people who are uninsured. We have 27 million uninsured. Let's talk about 27 million. Most of the larger employer groups are self-insured. Most of the senior folks have Medicare. 60 to 70 million, I'm sure they have some type of an assistance program. My main focus is on those groups. Do you want to mandate them or you voluntarily? A lot of folks in the United States, they think buying a health insurance is a waste of money. People have money, folks, don't take me wrong. People have money, but they don't want to buy it because you're wasting their money. For those folks, I'm telling you, this is what forpay.org gives you a clear-cut idea. People who don't buy health insurance because they're wasting the money, they're wrong. You make more money by getting a health insurance, getting a deductible health care policy so that you can qualify for a health savings. That's the beauty about it, folks. Once you put in money into the health savings, that is yours to keep forever, for your lifetime. You can give it to your loved ones. That health savings accounts is yours. Nobody can touch it, folks. You know how much it is cost to get your health coverage? If you're buying a deductible, folks, it's cheap. You can buy, depending on your affordability, you can buy $1,000 deductible, $2,000, $3,000, $5,000, $7,000. Depending on your capability, folks. But bottom line is you need to bring your premiums down. That way you qualify for a health savings. And you can put money aside. I've been telling you all along, $10 a day, $20 for family, which comes to $300 for individual, $600 for the family. Again, it comes to $3,600 a year, $7,200 a year for the family. It goes year after year, year after year. That money is yours to keep, which has a triple tax benefit. You don't pay taxes. You don't pay taxes when you contribute. When you use it, withdrawals are not taxed, and appreciation. Whatever the appreciation you get, the interest, whatever it is, interest rates, appreciation, it's not taxed. So let's get back to mandate versus voluntary. People, when you give an option voluntary, what is voluntary insurance? Yes, this is what my main focus has been. When you talk about voluntary insurance, you know, this 27 million, so-called 27 million folks who are uninsured, they're all from small businesses, folks, small mom and stop. You know, the small businesses, it's a bread and butter. It is a backbone of our economy. I can't believe we are not focusing on the small businesses providing health insurance. It can be done so easily, folks. You have to give benefits for the people to buy health coverage. When you say voluntary, okay, if you are an individual, you're self-employed. If you don't buy health insurance, you lose all exemptions, man. You can lose all your exemptions. When you file your taxes every year, you lose your exemptions. Even for your family, you lose your exemption. So that incentivizes to buy a health insurance. And you can contribute to your health savings and you can make lots of money. These people think they're wasting money, they're making money off of your health insurance. Second thing, folks, if you're working for a small mom and pop stores like a grocery store, restaurants, medical offices, you name it, folks. This is where our backbone of our economy is. If an employer, small business employer, doesn't provide the health insurance to their employees, the same thing, folks, same thing. They lose the exemptions. They lose the exemptions. As a matter of fact, when they lose the exemptions, they're better off getting the coverage for their employees. Well, you may ask me, how is it possible if suppose in a family of 4 or 5, one person who's really as a disabled, his insurance premiums are so high they can't afford it. And how can an employer provide that? There is a solution for folks. If one person in the family is disabled, you can get a coverage. You can request health review authority to look into it because they're not able to. They can separate him and give him he can qualify for a certificate of guaranteed coverage. That particular individual get a certificate of guaranteed coverage. The rest of the family premiums will go down, and the employer should be able to make the premiums. Again, when you're making premiums as an employer and employee share. Employer and employee share 50-50, 60-40. Basically, employee has to contribute and employer has to. And especially when it comes to health savings for employee, when you when you're buying a premium, automatically 50 to 60% of the premium goes into your health savings, folks. This is what the Kaiser HSA has been talking about. I think Kaiser HSA has the same thing. You know, I don't like this bronze and silver. Basically what they are trying to tell you is bronze and silver means your certain percentage of your actuarial, your value is lower when you pay higher. So you can still get your HSA savings, but bronze and silver is deductible. That's where the difference is. If it's 3,000 is silver, if it's 6,000 is bronze. You know, they can be more transparent. I can tell you this is your deductible. Up to that deductible 3,000, you are responsible, or employer. They share. Employer employee share the expenses if they get sick. That's easy, folks, and it is. I wish we wake up as Americans, talk about small businesses, especially the restaurants. They have suffered a lot under the COVID. This is the time with the technology on consumer side. Let's focus on it and bring back consumer-driven healthcare, folks. You are personally responsible. When you have a deductible up to a certain amount, you're responsible. So you don't abuse the healthcare. right now, unlike what we have right now. People abuse it. When they get a free care, they abuse it. That's the human nature, folks. You guys need to get it. Human nature, when somebody is giving you free for nothing, you abuse it. If you can't get that, I'm sorry. You're in the wrong side of the history, man. This is... Anyway, if you found a value in what I'm saying, hit that like button, subscribe, share, and make some comment, folks. I love you guys. We will see you in the next episode. Goodbye and God bless.